Welcome back to the Money and Wealth Show. I'm Sterling Fox. Our special guest this week, joining us from Dallas, Texas, is the president of Millennium Wave Investments, a prolific letter writer and author. John Mauldin is with us. And John, you described in some detail the situation in Europe, particularly using the Greek example. It's the one we know best.
Right.
Let's flip across the pond and bring it closer to home, here to North America. The Obama administration, along with all of the other partners at G20 in Toronto recently.
And we want to thank you for sponsoring that as Canadians and putting your $3 billion up.
Only cost us a few cop cars. It wasn't too bad. And $1 billion. So
Yeah.
thank you for mentioning that too. We're still trying to get over that.
I don't blame you.
But there was an agreement of sorts amongst the 20 member countries and others that debt and deficit reduction must begin.
Right.
I got the sense that President Obama, perhaps followed closely by Sarkozy from France, was among the most reluctant contributors to that message. I don't think the Obama administration is serious about the U.S. debt. Do you?
No. And that's because their main advisors are neo-Keynesians. And they think that cutting in the middle of soft economy is the worst thing to do. That's their belief. And what I try to show, is that government spending, a dollar of government spending doesn't really get you anything. It just takes it away from private spending. There's no traction to it. And that's what the studies from Harvard and then another one from Italy show.
There seems to be a gathering consensus here in Canada that the government stimulus programs, which have now ended here, really didn't amount to much and didn't work very well.
Well, they have an immediate, like, kind of sugar high effect, but they don't do anything permanent, and you end up with more debt. So that's the problem. Now, there are times and places for government involvement and government stepping in, but not all times and not all places. And at some point, you have to begin to get your fiscal house in order. In the U.S., I think the elections this November
Could it be an interesting year, John?
Well, I think if things continue on the way they are, it wouldn't surprise me to see the Republicans take the House back. That means we've got a locked, that means nothing can happen, which is probably good. Considering that what they've been doing has not been things that I've been happy about. I mean, we've just increased spending and this financial regulation reform that we've done is a joke.
Well, let's talk a little bit about one of the remedies that the Obama people are presenting, or proposing at least, and it seems to be getting some traction. That's the matter of, we have HST and GST. Britain has the VAT, the value-added tax.
Right.
The United States is now considering, behind closed doors at the moment, some kind of national value-added sales tax as a revenue stream.
Well,
how close do you think they are?
I don't know, honestly. There's going to be a lot of give and take. They certainly won't be able to get it done by November. They're going to lose control of Congress. Once they lose control, then if you're going to have a new tax, you're going to have to negotiate with the Republicans on a serious level. They've been able to more or less ignore them now. And there may be some trade-offs. I mean, I wouldn't be against a VAT if we could reduce our corporate taxes, because we have the highest corporate taxes in the world, and it really makes our companies non-competitive. If we could reduce our income taxes, I mean, if there's trade-offs, and everybody knows our taxes are going to have to go up because our entitlement programs are just massively underfunded. So, I mean, I don't know what the compromise will come down to.
You're a worldly guy. You travel a lot. You pay a lot of attention to the global economic scene, John. And when I hear Americans carrying on about the tax burden individuals and corporations carry, we're much higher taxed
Much,
in
right.
Canada, and even Canada, and this is hard for us to believe, is a relatively low tax regime compared to some of the European jurisdictions. So is there also a matter of a reality check for American taxpayers to come to terms with the fact that they really do pay low taxes relative to the rest of the entire world?
Well, next January, my effective tax rate in Texas without a state income tax goes to about 45%. If you live in one of the high income tax states like New York, California, your effective tax rate is going to be in the 55 to 56% range.
Okay.
Okay, and then you've got sales tax and housing taxes and all the other taxes.
And possibly a VAT.
And, I would argue that we're not a low tax country. Now, there's a lot of people in our country that don't pay taxes. I mean, the bottom 50% of the
American
wage earners only pays 3% of the income tax.
Okay.
The top 1% pays 20%, 6% of all taxes. And in fact, I think if I remember right, it's the top 1% pays as much tax as the bottom 85. I mean, we've got a heavily skewed base. Now, so when people say we're undertaxed at certain levels,
Possibly.
yeah, we are.
Okay.
And that may be some of the compromises, is that the bulk of the places where you can actually go get taxes without really hurting small businesses is in the middle class. And that's where the Bush tax cuts really made a difference. The middle class got large tax cuts, percentage-wise. And in fact, after the Bush tax cuts, the top 1% were paying significantly more taxes than, say, the middle 20. I mean, it's hard, you don't hear that characterization, but there really was a lot of middle-class tax cuts.
Interesting.
And,
John,
so we'll see if those, if those go away in January, if they don't change something.
all right. We'll be back. Lots more to come with John Mauldin from Millennium Wave Investments in Dallas, here on the Money and Wealth Show. Please stay with us.
Good afternoon. My name is Larry Ray. I'm the president and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.